the new laws that are being passed, like the market structure bill and the stablecoin bill in the United States, and where MiCA is solidifying, what's going to end up happening is the big guys, the Magnificent Seven, are going to come into crypto, and that's going to bring 3 billion users into crypto. You're going to have cryptocurrency wallet in your Android phone. You're going to have a cryptocurrency wallet in your iPhone.
Breaking news. This is huge. $10 trillion Charles Schwab. This is one of the biggest financial companies on the planet. Their CEO just announced this week they plan to launch spot crypto trading in the next 12 months. Understand how big of a deal Charles Schwab doing this is. They are a top US brokerage firm with double-digit trillions in assets under management. This is coming from the top guy, Rick Wooster, during the company's 2025 Spring Business Update this week. He says, "Our expectation is that with the changing regulatory environment, we are hopeful and likely to be able to launch direct spot crypto, and our goal is to do this in the next 12 months, and we're on a great path to be able to do that." Understand that this isn't their first foray into crypto. In fact, this is an increase into what they're already doing. Schwab currently provides crypto-linked ETFs and crypto futures. Adding spot crypto to its product lineup could enhance its competitiveness against their competition like Robinhood and Webull. This is also very good for Bitcoin and crypto in general, as Schwab's entry into spot trading is also expected to increase Bitcoin and crypto's accessibility, liquidity, and legitimacy for crypto investors on its platform. You know, one of the many reasons they're doing this is because the ETFs and futures products were so popular, they saw a 400% increase in traffic to its crypto-focused web content. And when you analyze exactly what the CEO is saying, you begin to understand there's mass competition in Wall Street and traditional finance to provide these financial instruments to crypto participants for crypto. Quote from the CEO, "As people in the industry are thinking about crypto, they'd love to work with a trusted brand and a firm that can bring them a lot of capabilities, and we're that firm." Now, because of things like this and so much more, Bitcoin is severely undervalued right now, in my opinion. Bitcoin's price could easily explode after it reclaims $100,000. And over the next few minutes, I'm going to tell you exactly why. And let's start by going through a series of analysts' updated Bitcoin price predictions. So first, Scaramucci says that despite everything, he still believes Bitcoin ends the year at $150,000 to $200,000.
I have a $200,000 price target for year end. It's consistent with the 4-year curve of Bitcoin. And so I'm buying right now because I think Bitcoin's probably at a 20% discount from where it should be trading. But I do think it can get to 200,000 by year end. And if I'm wrong, it's 150 to 200,000. I think that's a successful year for Bitcoin.
You know that Charles Hoskinson, the founder of Cardano, one of the founders of Ethereum, he says that he's pretty sure Bitcoin's price hits $250,000 over the next year or so.
I think Bitcoin will be over 250,000 by the end of this year or next year.
And what's really interesting to me are the analysts that are even more bullish than $200,000, $250,000. Samson Mao, founder of Jan3, their mission is to accelerate Bitcoin adoption. He says that based on everything he's seeing, he thinks Bitcoin's price ends the year closer to $1 million than most people think. This is really interesting to me and makes you think, are people being too safe with their price predictions?
Just analyzing predictions, everyone's trying to be safe and be reasonable. What's a reasonable Bitcoin price? Maybe double. So you see a lot of 200, 250s. And maybe a couple at 3, 4, 5, and then a million. But I think Bitcoin is not a reasonable thing. We're not going to gradually go up. I mean, we went from 0 to 105 now in 16 years, right? And we've seen Bitcoin do 10x's, 17x's over very short time frames. And if you look at the history of Bitcoin, when Bitcoin did do a 17x, nothing was happening. Absolutely zero was going on. It just went up.
And going back to our top story, Michael Saylor actually predicted because of things like this, Bitcoin will hit $1 million.
If it's not going to 0, it's going to 1 million. It's either nothing, right? If it's nothing, then it's getting scrubbed out and banned. And of course, we now know that it's not getting banned, right? There's no way that Fidelity, Citadel, BlackRock, Charles Schwab, Deutsche Bank, Credit Agricole, Banco Santander all decide they're interested in this, right? They're not endorsing a tulip bulb.
So let's really dive in to the title of today's video. Why are so many expert analysts who are in the know so sure that Bitcoin's price needs to go a lot higher based on everything they're seeing happen? CZ Binance explains 195 countries exist in the world and there is a global race going on. Even if just some of these countries allocate 1% into Bitcoin, that would send prices sky high. Most people aren't thinking about this.
The largest economy in the world is adopting crypto, and they're buying crypto. They're setting up crypto reserves. That means any other country who's not doing that now is going to be at a significant disadvantage when they want to do that later, because the richest country is going to buy Bitcoin first. They're going to buy a whole lot of them, and the Bitcoin price is going to go up. The next country that comes in to buy them is going to be buying them at a higher price, so they can only buy less, and they have less money. Now, I think we're going to see a race towards countries adopting Bitcoin, the major cryptocurrencies. It's good for the crypto industry as a whole, but with some logic, like a lot of the retail, smaller guys will be left even further behind.
To go even further, we're about to see Apple, Tesla, Nvidia, the Mag 7, and other biggest companies on the planet enter into the crypto space. Charles Hoskinson explains what's about to happen.
The new laws that are being passed, like the market structure bill and the stablecoin bill in the United States, and where MiCA is solidifying, what's going to end up happening is the big guys, the Magnificent Seven, are going to come into crypto, and that's going to bring 3 billion users into crypto. You're going to have cryptocurrency wallet in your Android phone. You're going to have a cryptocurrency wallet in your iPhone. You're going to have a cryptocurrency wallet Windows, and they're going to be using stablecoins. It's not because Papa Satya over at Microsoft is like, boy, I love crypto. It's he hates paying fees. If you're Microsoft, you got people in 150 countries, and you hate some local bank in Bangladesh or Pakistan or someplace charges you 5% here or 10% here. You want to get rid of that whole thing. So why not pay them in stablecoins, Windows to Windows, and you're your own bank. Plus, if they're issuing that token, they could wake up just like Tether does and get $20-30 billion a year in yield from treasury bills.
Because keep in mind, Bitcoin has never been as programmable and quality and strong as it is today. Bitcoin is finally at the point where traditional finance and apps like Apple and Google can integrate it into everything. Charles Hoskinson explains this monumental shift that most people don't think about, and also how Cardano is trying to capitalize on a piece of it.
When Taproot came and Bitcoin DeFi came, Bitcoin now has the ability to pay yield, because people can flip a switch, they can turn on Bitcoin DeFi, and they get yield from their Bitcoin. Nation states are buying Bitcoin, ETFs are buying Bitcoin. There's too much retail interest in it. There's too much structural liquidity in it. It's really a question of, can they get a smart contract layer? And because of Taproot, they can. So Cardano's playing very aggressively with Bitcoin DeFi. We're trying to be the DeFi mode for Bitcoin. But there's other people chasing it as well, like Stacks and dozens of other projects. There's already $5.8 billion in TVL from the Bitcoin side. They're not even trying. So when you pull that lever and you get 5 or 10% of the supply involved in that, that'll be larger than the entire market cap. The TVL will be larger than the entire market cap of Solana or potentially even Ethereum. It's 4 times the size of Ethereum and Solana, the market opportunity there. So I think it'll have to be done through layer 2s and through other systems. But Bitcoin will do that because people want the money.
So there's a reason we're seeing so many experts put their reputations on the line and predict much higher prices. They see what's going on. Institutions continue to pile in. BlackRock now building on Solana. BlackRock likes Bitcoin, Ethereum, Solana now. I wish more retail people would watch this clip and truly understand what's going on in the space. Subscribe to Altcoin Daily. We keep you informed on everything going on in crypto on a daily basis. Watch this video. I'll see you tomorrow.
So BlackRock recently expanded its tokenized money market fund to Solana. What does this signify about the blockchain's expansion into institutional adoption and wider trends?
We're super excited about BlackRock bringing their BUIDL product, which is one of the flagship money market funds in the industry, to Solana. Look, Solana, we've been working on partnering with institutions for quite a while now, because I think that our vision for what blockchains are is that it should be global financial infrastructure that bring all of the assets available to people around the world that have access to the internet. But I think there now is consensus that the best assets want to be everywhere, and the best assets want to be able to sort of meet demand and meet buyers and meet holders where they are. And increasingly, if you look at crypto as an asset class, we've got what, $3 to $4 trillion of assets on chain, and this is now a new distribution platform. And that's why I think some of the best assets from the best asset managers in the world are now looking at this as a really not just viable, but also desirable distribution platform for their assets. So it starts with a money market fund, and that's, I think, how folks kind of run the tokenization infrastructure. Once you've tokenized a money market fund, we've already seen private credit funds come online, and then that's going to open up pretty quickly into the whole world of traditional finance assets, which taken as a whole, I think something around $100 trillion of assets.